Trump is one of the most market-friendly presidents ever, meaning he's going to focus very much based on how the stock market does. It would still be less than the value of gold today. And I think Bitcoin will surpass the value of gold. Today, we're recommending at least 2 to 5% into Bitcoin. If they invest 2 to 5% of their money and somehow crypto goes to zero, they didn't lose everything. But if Bitcoin reaches some of the targets we expect, then Bitcoin could end up becoming 50% of their portfolio again. But I'm not recommending any specific tokens or cryptocurrencies along that line. There is so much money saved by the boomers. If the stock market goes up 20%, well, they just made 30 trillion, okay? I think Trump wants American businesses to make a lot of money so the stock market goes up.
Tom Lee's latest Bitcoin market outlook highlights his positive view on Bitcoin and digital assets, especially in the context of US politics under President Trump. Lee believes that Trump's market-friendly policies, such as deregulation and pro-business stances, will benefit certain sectors like financials and small-cap stocks. However, he sees multinational corporations, industrials, and sectors like healthcare and energy as more vulnerable, especially given concerns about tariffs and deficit spending. Lee emphasizes that the Trump administration is likely to pursue a pro-digital asset agenda, which he sees as highly favorable for Bitcoin. He points out that Trump's advisors, many of whom are Bitcoin holders, may push for Bitcoin to become a reserve asset. Make sure to watch this next clip where Lee provides more detail on his outlook for Bitcoin. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio. And get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Tom Lee.
Trump is one of the most market-friendly presidents ever, meaning he's going to focus very much and rate his presidency based on how the stock market does. And so that's good for investors because if he introduces policies that worry markets, like deficits too big or tariffs too aggressive, he'll see it in the stock prices. I think the safest way to navigate this from our perspective is to focus on things that we all agree he'll pursue. Deregulation, pro-business and market-friendly, which means financials and small caps, but he does want to make the government more efficient and even do tariffs. So I think multinationals are a little more challenging and industrials like defense would be challenging and of course negative for healthcare and energy. From a bond market perspective, I think interest rates are initially rising because of concerns about deficit spending. But again, that's negative for stocks. So I don't think that Trump nor his advisors want interest rates to go up dramatically. So I don't think interest rates are going to be the reason stocks underperform. And then from a crypto perspective, it's clear to me that he's pursuing a very pro-digital assets platform. I mean, he ran on the idea of Bitcoin potentially becoming a reserve asset. Almost all of his key advisors are large owners of Bitcoin. So I think Bitcoin is going to be very central to the White House initiatives over the next 4 years, which of course is positive for Bitcoin. This is going to drive some action or communication from the White House. As you know, whenever there's been a Fed put, when the Fed is dovish, then investors are confident buying stocks regardless of circumstances because they know the Fed is protecting the stock market. Over the next 4 years, we might have both a White House put and a Fed put. I think that's very positive for stocks. I wouldn't overthink it.
Thanks for watching. Please don't forget to subscribe for news and expert predictions direct to your inbox.